So, can anyone out there tell me what links the 3 facts on the board behind me? And the answer is no, because I'm trapped in a small video room and you're out there. All right, but if you were in here, okay, 14 years, the Queen's banker, Coutts & Co, and Spanish output, or GDP. What would link those 3 terms? The answer, money laundering. Okay, so today's video is all about money laundering. It's very topical right now. Coutts & Co, the latest bank, okay, to fall foul of the regulator, the Financial Services Authority, who've slapped a fine on them for failure to follow regulations, failure to check out certain clients carefully enough. All right, Spanish GDP, that's the amount that it's been estimated is lost every year to money laundering related activity of one sort or another. So whatever it is, it's big. And 14 years is the maximum penalty plus an unlimited fine that can be landed on you in this country for being a money launderer. So it's taken pretty seriously for a financial crime. 14 years is a long time in prison. Right, so money laundering. What is it? Okay, how do the authorities go about trying to stop it? Keep that fairly brief. And how can you avoid being caught up in it? All right, this is a guide not to how to be a money launderer, but how not to be a money launderer. Right, so 14 years in prison. That's a lot for financial crime, and that's because money laundering, the regulators define as taking the proceeds of crime and converting them into legitimate funds. Right, that's regulator speak, lawyer speak. I would say it's taking hot money from a dodgy deal and turning it into money that you won't get clobbered for holding or spending. Disassociating the crime and the money from the final transaction where you spend your ill-gotten gains on that yacht or that fast car or that flash house. All right, and that process, okay, of disassociating criminal funds from their final target, okay, which is probably a hedonistic, nice lifestyle as a money launderer, is what money laundering regulations are aimed to try and sort of stop and combat. All right. Now, regulators reckon that money launderers use 3 stages to convert hot money. Now, what is hot money? All right. Well, you need a crime, and there are some pretty serious crimes linked to laundered money. So the crime might be a drugs deal. Okay, it might be terrorist activity, it might be arms sales. Okay, it might be fraud, it might be tax evasion. All right, some pretty nasty stuff. So imagine I do a drugs deal, okay, and I've got hot money. Okay, the first thing I need to do, regulators would say, is place it. Placement is getting rid of that hot money initially. Right, that's where I'm most likely to get caught, by the way, and we'll look at some examples in a moment. Then I layer up that hot money. I muddy the waters by doing a series of largely pointless transactions commercially, just to make it difficult to trace where the money's gone. And then I integrate the funds back into the economy by spending the money, hoping that what I spend is nice and clean and can't be traced. Now, money launderers do not sit around in small rooms going, Brian, have we layered for long enough? Should we integrate now? All right, so let's put it down into English terms. You will hear placement, layering, integration. Placement, getting rid of hot money. Layering, muddying the waters. Integration, spending your clean cash. All right, so what does that mean in practical terms? Well, placing, you've just done a deal, sold some drugs, for example, got hot money, got money you can be arrested for holding, it's linked to a crime after all. Okay, what are you going to do next? You've got away with the crime, what about the cash? Okay, well, essentially, money laundering linked transactions are often the ones that are too good to be true. This is where you need to watch out. Okay, somebody offers you a set of terms that are too good to be true. So some spurious examples, but they're actual real life examples too. You're running a building firm. Building firms are always short of cash. Okay, some bloke in a flash suit and a pair of shades walks up to you and says, Tim, I think I can help you with your cash flow problems here. All right, I operate outside the main banking system. What I'm able to do is offer you a short-term loan, okay, at a really, really low competitive interest rate with an option, okay, to have the loan called in early if I need to. Okay, and because I might call in the loan early, okay, I'll let you pay me back much less than I'm going to lend you. Okay, so the builder thinks it's too good to be true. Fantastic, I'll take some of that. I need the money. So he borrows £1 million off this dodgy character, pays a very low interest rate, and sure enough, the same dodgy character turns up and says, I need to call in this loan early. Okay, if you, the builder, can give me, say, 3/4 of the amount, we'll write it off. The builder thinks it's brilliant. Okay, I borrowed money, which I couldn't get from anywhere else. I paid a low rate of interest, and now I can get rid of my debt for much less than I borrowed. Too good to be true. Okay, and that's the money launderer simply taking dodgy money and handing it over to a builder's merchant, hoping to get different money back, because hopefully it'll have gone either as cash or it'll have been recycled through a few bank accounts by the builder, okay? And the whole point is to make it slightly more difficult for the authorities to trace the original cash back to the money launderer, okay? Or if you've seen the movie Heat, okay, you'll know that's the Robert De Niro, Al Pacino movie, okay, Val Kilmer, recommend it if you haven't seen it. This is not a video selling a film. Basically in that film, in the back of the van that they blow up right at the start are Eurobonds. And Eurobonds are bearer bonds. If you have them in your hand, they're yours, like a £5 note. It's not true of a property, that's a registered instrument. A property is yours if your name's on the register. But Eurobonds, you've got them in your hand, in the back of the van, they're yours. So blowing up that van, grabbing Eurobonds, means ownership is holding the bonds, okay? Now, why is that attractive to a money launderer? In some of the older videos, okay, you'll see Eurobonds mentioned a lot, and probably Switzerland mentioned a lot too. Eurobonds are attractive to a money launderer because you can buy and sell them quickly, and it's quite hard to trace the change of ownership. So in that middle stage, the layering, we are just trying to make it difficult for the authorities to work out what's going on by just doing a series of transactions that have no commercial purpose really. You don't even mind if they're profitable as a money launderer. Okay, you just want a difficult trail to follow. Eurobonds have been cited as the classic target for money launderers because they're bearer bonds. Now, you might be thinking, why would someone offer you terms that are too good to be true? I mean, they're going to lose money. Why would a money launderer do that? Well, the reason, of course, is that crime is incredibly profitable. Right? The margin on a drugs deal is enormous. Right? You get paid a lot of money for crime. So money launderers don't care that they're losing money as they do all this layering bit. All they care about is they're not caught, okay, in possession of hot money, or they're linked back to the original crime. And that's how they can offer terms that are too good to be true, trying to turn the hot money into cold money. So, as a punter, that's something to watch out for. And the reason is that assisting a money launderer, either intentionally or negligently, can land you in prison as well as them. All right? Now, this also explains why, when you try and open a bank account, they typically ask you for lots of information. Often they want copies of, passports or tax bills or council tax bills and so on, because banks are supposed to stop money launderers from using accounts at the bank. All right, so just as a point of admin, you'll find that if you try and open up a new bank account, they'll want to know who you are and the origin of the money you're trying to pay into a bank account. Okay, because otherwise the bank could be accused of helping you to launder funds. Sounds easy to do, but in the past there have been one or two classic cases involving Nigerian princes, for example. Well, they turned up at a branch of a bank in London with bodyguards, an entourage, okay, went to the cash desk and said, we demand to open an account. We are the sons of the royal family of some African state. And the bank clerk says to them, do you have proof of who you are? And typically a bouncer whips out a banknote with one of their heads on it, says, will that do? All right, and that way some quite big figures have been able to launder funds through the British banking system through a mixture of sort of intimidation and impressing with their credentials. All right, so banks in particular have to be on the lookout for laundered funds, and that's why those particular checks are done. Now, anything else to say about money laundering? Essentially, it is anything that converts the proceeds of crime into legitimate funds. Okay, you'll hear the words placement, layering, and integration mentioned. That is cooling down hot money. And for anyone out there watching the video, okay, be aware that because laundered funds are linked to some pretty nasty crimes, you don't want to be nailed for money laundering. And just to mention,